About one of key levels, one type. It is limit level. What does it mean and how it looks? I'll show you here. When we have some level and we see the price come to that level and just stopped, and we see few candles in a row just bounced from this level, something like this, or when we have down move, something like this. What does it mean for us as traders? When we have such level, we understood that big player holds the price and they do not want to move, to make down move or up move. Because, as we spoke before, a lot of traders set their stop losses under this key level. And if price will break it down, it will get that volume and can start down move. If big player have big position and want to continue a trend, will do everything to not that happen. Also, the same when we have, for example, resistance. Here a lot of people set their stop losses, If the price will break it up, price will continue up move. How we can use limit levels in real trading? Mostly I use it to continue the trend because, to be honest, it's the best because you have low risk and great potential reward. There are examples which I will show you in practice on oil and gold, especially on oil. Maybe a year ago, oil started downtrend, powerful downtrend. And there are a lot of places on the chart when we see the price stopped it and we have really clear level from which price just bounced. That means big players who started this whole down move do not want to price come back. And they just take all volume of people who buy and continue down move. That's all. Also about gold. There an example on gold. When gold started uptrend and there was a feedback from which price bounced a lot of times. It was the best place to open entry to continue the trend because here you have little risk. In these places you have small risk and potential reward could be in 5, 6, even in 10 times bigger than your risk. The same here. Examples I will show you in the future. The same here. You have low risk, potential reward in 5, 10 times bigger. It's what I call trading, when you have great potential reward. Okay, let's go to a charts. I will show you an example. Let's take a look how limit levels looks on real graph. For a start, I want to show you an example on Euro British Pound because they're a really pretty nice example. Take a look. This type of levels you can find on all markets. It doesn't matter, is it Forex or it is gold, oil, something like that. Doesn't matter. Everywhere you can trade it. Take a look on it. What does it mean, limit level? It means that some candles just bounce it from one level. Mostly I use that type of levels to continue the trend because, for example, here we have downward move. The most important question is where you can open a position with low risk. Limit levels, it's one of type of key levels which you can use in your trading. Take a look on 1 hour chart. Take a look on this place. Do you see how many candles in a row bounced from this level? Here we have candle which created this level. And after that we have entry with really low risk. Take a look. Near this level we can open a position with low risk and potential reward with low risk in 15 pips. And potential reward could be in 3 times or even in 7 times bigger than potential risk. It's huge amount of money. Okay, take a look on another examples of limit levels. A lot of them were on oil because oil started global trend half a year ago. Take a look on oil and how oil started this global downtrend. And here we could find a lot of places where price just stopped and moved down. Take a look. Take a look on these candles. Price just started this global downtrend and after that there was a lot of places where price just stopped. It's one of the best examples of limit level. This example and this example. Because here you have low and predictable risk. You can draw limit levels on different time frames. You can use it on 1 hour chart, on daily chart, on 4 hour chart. The bigger time frame you use, the more powerful would be that level. For example, these daily candles, they one of the most powerful signals in trading. Because near these levels you have low predictable risk and potential reward was price moved down 1 to 60. If you have risk 1% of your account, you could take 60% just doing nothing, open one position and hold it. It's a magic of mathematical expectancy. You need to use it in your trading. Okay, let's take a look on another example of some other currency pair. I want to show you that that stuff works everywhere. British pound, New Zealand dollar. Here we have great example. Take a look how many candles in a row bounce from this level. And here you can find a lot of stuff. Take a look here. When price broke up this level, which based on these 4 daily candles, price bounced up more than 100 pips. And also take a look here. When price broke it down, this candle came back to this level and bounced down maybe 500 pips, 700 pips. Price moved down. Near this level, you could take a really great entry. Okay, let's open some other examples on different currency pairs. Let's open, for example, Australian dollar versus American dollar. Let's find some examples when price bounced many times. Take a look here. When price bounced from one level, on this daily chart, 1, 2, 3, 3 daily candles bounced, and here we had fake broke. And also these 2 candles approved this level. Take a look here. Bounced, and just make up move. Also take a look here. 4 daily candles bounced from one level. Maybe pip in pip. Also here, you need to understand, if you use, for example, daily charts, there could be some little distance between these tails, between how many pips this tail close to this level. But if you use lower time frames, for example, 1 hour or 4 hour, there must be the same. Price must bounce it from the same price. There could be difference 2-3 pips, not more. Here it could be bigger. But take a look how price bounced, and after that just make this powerful down move. Okay, let's take a look on another example. New Zealand dollar versus American dollar here. Let's clean all this math. Okay, friends. Take a look here. There was a powerful limit level. 1, 2, 3, 4 daily candles in a row. And take a look what happened when price just came here. In the future, I will show you how you can trade these skill levels. The most important now for you to learn how to build it properly, because in the future there will be different type of entries. There will be fake broke, and bounce. Because here price made a fake broke and bounced from this level. And there were little risk and great potential reward. Okay, let's take a look on some other instrument, for example, S&P 500, because I want to show you that this strategy works everywhere, on all markets, on all different markets. Okay, let's find a really beautiful mirror levels, limit levels, my apology. Also there, take a look, there were a limit level here. Take a look how the price bounced from this price. It was a weekly chart, there could be some difference between these levels, as I spoke before, but on lower time frames, only pip in pip. Okay, let's take a look on daily chart and find some limit levels for you. Take a look at this daily candle, and take a look how price bounced from it and make such down move. The best will be if there will be candles in a row. For example, 3 candles in a row, 5 candles, like here. How many candles in a row? This picture is not good because it's good when key levels based when price bounces from the level, because here we have inside candles in this one candle. It's not good and proper to trade, because there could be something like this, up and down move, and only after that price can continue some trend. Let's check more pictures. Also, let's take a look on lower time frames. For example, for our chart. For our chart, good to use when you open entries to continue of the trend. Mostly this time frame is really good to continue of the trend. Take a look here, how many candles in a row bounced from this level. Take a look. In the future, I will show you that you can trade bounced and broke from this level. Take a look how the price broke it, big player accumulate position here, take new volume, broke it, and continue up move. Now, let's take a look on another picture. I want to show you beautiful pictures, because in real trading there could be something different like this. Some candles could make a real low, but all candles close in one level. In trading, you need to find the best pictures as you can. Once more, I want to show you on the chart how it must be. First, there must be key level. Second, there must be few bounced from this level. For example, price bounced first time, and after that, for example, price bounced few times in a row. It's a scheme of limit level, few times in a row. only after that we will know that someone holds this level. Because price can bounce from this level only when someone sell near this level. That's why big player holds this level, and near it a lot of pending orders, stop losses. And after that, I will show you how to open entries near such levels properly. In this video, we discussed limit levels, how you can build it on a chart and why you should use them. On next video, I will show you mirror levels. It is one of my favorite levels, which I use mostly in my trading. Let's go ahead.